In the last 3 years, Microsoft is up 202%, and year to date, it's up 36%. And during this past month, Microsoft has been all over the news. Microsoft to unbundle Teams from Office seeking to avert EU antitrust fine. Microsoft to unbundle Teams software in Europe. Microsoft memo leak reveals guidance for managers, connect rewards to employee impact, avoid salary freeze talks. Lumen dives into Microsoft 365 Copilot to help enhance employee efficiency and customer relationships. And Microsoft-backed OpenAI said to surpass $1 billion in revenue run rates. Okay, let's first look at Microsoft's stock and determine an optimal price point if we're interested in buying this stock. When we see a price target for Microsoft, on the low end it's at $232 and the high end at $440, with the average price at $387.17 per share. Looking at the 6 most recent recommendations, all maintain a buy rating. Let's also include Graham's number, which is a valuation method popularized by Benjamin Graham, the father of value investing and Warren Buffett's mentor. We include the book value at $27.75, earnings at $9.67, and so we get $77.70 per share, making Microsoft incredibly expensive right now. But unlike analysts who can be too optimistic and Benjamin Graham who can be too conservative, there should be a middle ground, and that's my fair price for Microsoft. But before we get to that, join my Patreon. You'll get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. So should you buy at this current price? I give Microsoft a fair price of $218.35 per share. Right now, the stock is expensive, and you'll see that many long-term investors will think so as well. Now, you know the price you should buy, but we need to analyze the business and see if there's a good business behind the stock. For the rest of this video, you'll see a point system at the top right hand of the screen. 1 point will be added every time we have a good metric. The closer we get to 21 points, the better the business. Let's first look at Microsoft's expected growth, otherwise what we can expect them to do going forward. We want both growth metrics to average above 8%. Microsoft's next year's projections are good at 15.1%, and the next 5 years looks like that growth will stay steady at 14.4%. Since it passed our threshold, let's add 1 point. Next, let's look at Microsoft's key valuation metrics, specifically 5 of them. These key ratios, we want all of them to be below the index in order to give Microsoft a passing grade for this section. The price to sales ratio is at 11.56, whereas if you invested in an index, it would be at 2.23, no points. The PE ratio is at 33.86, whereas the index is at 20.31, no points. The price to cash flow is at 27.96, whereas the index is only at 14.58, no points. The price to book is at 11.81, whereas the index is at 3.54, again no points. And for the PEG ratio, we want the ratio to be below 1, and it's at 2.47, so no points again. Noting that down in this section, we add no points. Following that, let's look at Microsoft's operating performance, specifically 6 key metrics that deal with its business health. For these first 3 returns, we want the percentage yield to be higher than the alternative, which is again the index in order to get a passing grade. The return on assets is at 18.63%, with the index at 10.09%. Let's add 1 point. The return on equity is at 38.82%, whereas the index is at 27.34%. Again, another 1 point. The return on invested capital is at 28.96%, with the index at 17.6%. 1 point. For these 3 margins, we want the yield to at least be above 15%. Microsoft's gross margins look very healthy at 68.92%. 1 point. The operating margins are at 41.77%. We add another point. And net margins are at 34.15% and another 1 point again. For this total section, we add 6 points. Next, let's look at Microsoft's dividend metrics. Basically, if you're like me and put great importance on getting paid as a shareholder, you'll focus on these metrics. Microsoft is pretty good since it pays $2.72 per share, translating to a 0.83% yield. But the yield is less than its 5-year average, so no points there. Include its buyback yield of 0.84%, you've got an annual yield of 1.67%, which is good, but it's less than its 5-year average, so no points. When we look at the payout ratio, Microsoft pays out 27.48% of its profits to shareholders, which is lower than its 5-year average, so we'll add 1 point for there. For this section, we add a total of 1 point. Let's move on and look at Microsoft's financial health by checking out its balance sheet during its most recent quarter. For these 5 metrics, we want a decent figure, but also we want them trending in the right direction to give a passing grade. We see its assets at $380 billion, which is trending up, so we get a point there. Liabilities at $185 billion, which is trending up, no points. Debt at $60 billion, which is trending down, so that's good, 1 point. Equity is at $194 billion, which is trending up as well, so we get another point for there. And cash holdings are at $104 billion, which is trending down, so no points there. For this section, we add 3 total points. Looking at free cash flow, right now Microsoft has high cash flow at $59 billion, and it's trending up, so we get a point there. What I see from these key metrics, Microsoft has an above average business. In the end, I give Microsoft a final grade of 63 out of 99. Overall, we've got a decently run business, but with an expensive stock. The tech hype will continue, but if you buy now, you might not be maximizing your return. So I'd say wait until the price drops before jumping in. So tell me what you think of Microsoft. Invest wisely, and as always, take care of your money.